Hello traders, welcome to the weekly outlook and setups volume 232. Iliya here. You know what we're going to be doing in this video, having a look at the markets, how they developed this week, what kind of opportunities we had, and most importantly, what we can expect for the upcoming week. Finally, we are getting some moves with the Powell speeches, with the news, with the ECB, with NFP as well. We're finally starting to move out of the consolidations. And I do believe the incoming weeks are going to be very, very, very nice. So, of course, without further ado, let's jump into the analysis and see what we can expect for the upcoming week. All right, before we get into the technicals, let's start this analysis by trying to frame our trading week in terms of the news. Now, we can see that on Monday, we only have one JPY news. And what that potentially means is that Monday could be a little bit slow. However, there is a little bit of a detail that usually the Mondays that are after NFP, they tend to move a little bit more than usual. However, if you actually have a look at how last week developed, we had a very powerful Wednesday, very powerful Thursday, and also a powerful Friday. So again, it does not make a lot of sense for Monday to move, especially when we do not have any news at all. If there was maybe something a little bit more, could have been nice. So Monday for me, it will be potentially a break, taking out the long weekend. Why? Well, because we have one of the most important news releases as well, the CPI for the US dollar. So Tuesday, wait for that news to be released. So again, Monday we take a break, on Tuesday we wait, and after this release is out, that is when it's action time, because then of course we have Wednesday, we have a little bit of a news right there. GBP news as well, which is going to be very good for GU. EU is also going to move. And then on Thursday, we have PPI, retail sales, unemployment claims again, big day for the US dollar again. And then on Friday, we also have a couple of USD news. So again, we can see it's an absolutely lovely week for the dollar. And we already have a very clear direction introduced on the DXY. So I truly believe after the CPI news is out, then of course, Tuesday, New York session, Wednesday, Thursday, and Friday could be very nice trading days. So my focus will solely go on the DXY and on the USD pairs because this week I lost a little bit of focus. I went to trade some miners and I missed some great moves. So with that being said, let's jump into the markets. All right, as always, starting with the DXY. Now, of course, we have said this for quite some time already, but we are coming from this very nice monthly imbalance we rejected February, and right now March is already starting to roll over to the downside with the first target of the previous monthly low being achieved. And I truly like how we're so far, like it looks like we want to close below it, and like on the weekly time frame we are definitely closing below it, which gives me a lot of confidence for potential shorts. Now, this is the market. A lot of times we say, all right, this just does not, it just makes full sense. It doesn't really make sense from here for the market to start popping higher. Everything could happen in the market, so let me just start with this. But of course, based on that monthly time frame analysis, I do believe that we could be headed for that monthly low down there. So of course, transferring that onto the weekly time frame after quite a couple of weeks, so after pretty much 4 weeks of a chop, of accumulating orders potentially within that area, waiting for precisely this week where we have Powell speeches, we have the ECB interest rate decision, we have some other news, and we have NFP as well. The market is finally making a move with this very nice weekly expansion candle. Now it pretty much attacked this. We have a very tiny little bit of a gap right there, which pretty much where the market kind of stopped, rejected, and within overall this base candle right here that could potentially act as demand. That could give us a little bit of a pullback to start the week with, and then to potentially roll over. Now the next more short-term target is going to be this weekly imbalance. Again, of course, because we have this demand zone, and below here we're going to have liquidity, so also paired with some imbalance here. So again, that could be the market right now reject, push lower, and then again reject, and then of course start making its way all the way down to the lows. So here we're gonna go and work with the daily time frame, and the daily time frame for the first time since pretty much since this bullish imbalance that happened on the 14th of February all the way until pretty much, yeah, March. Well, what kind of, yeah, around 2 weeks, I'd say, even more. We're finally making some bearish imbalances. Now, of course, on the daily, We have one that is quite high, but we also formed one that's formed on Friday. So this is essentially the one that I'm going to be looking at playing. So daily imbalance, very nice for potential pullback, and then to potentially start making our way lower to that weekly zone. And of course, the first target to start getting a little bit fractal is going to be that daily low. And then of course, dropping onto the volatility time frame, we can see that structure is bearish. Very nice. However, do we have any imbalances within that bearish leg? Well, no. That could sometimes means, of course, that this high here could become liquidity in order to come into the daily imbalance. So overall, I hope this does not happen on Monday, but even if it happens on Monday, to tap inside this daily imbalance, I would like to see, of course, the market on Monday to reject. And then on Tuesday, then I will be looking for the potential continuation lower with the news. Of course, anything could happen. We can just massively start rushing higher. Again, I don't care what's going to happen because I'm going to adapt with it. But this is how the DXY looks so far. We have so many bearish signs. We just have to be careful. How do we get in? Personally, I'm going to be spending time on the daily, just waiting for that daily pullback. And as we come inside this area here, then I'm going to be looking to focus on potential shorts. So pretty much my forecast is this, and potentially I'm going to be looking to trade after Tuesday's CPI. Euro USD, beautiful respect of that monthly imbalance. Again, we saw February very nice to reject with an indecision candle, and this month is already looking very nice. Of course, we can already try to forecast, although it's a little bit like too much to the highs and a lot of things could happen. We could forecast in terms of the monthly that the market could be headed towards that monthly high. Of course, the lower time frames have to support this. We're having a very nice expansion candle on the weekly time frame. The next potential target that I see is this, which is again similar to the DXY, a weekly, a little bit of an imbalance. And now what I also forgot to mention on the DXY and also on EU is that I do not want this week to cross this line. Because if we open and if we come all the way down, that is going to prevent a new weekly imbalance from forming, which is not going to be a very bullish sign. All right. So of course, I would like to also draw this on the DXY here. But again, you can see like if the market definitely gets to that area all the way up there, this means that it's failing the first daily imbalance, it's failing the second daily imbalance, and that could mean reversal. So again, I truly don't want to see this happening. Now, dropping onto the daily time frame on EU, it is a little bit tricky because on the daily time frame, we didn't really leave a nice imbalance going higher. We have a very tiny one right here that happened on a Friday. It still happened. It's still good. But then on Thursday, I was looking to have an imbalance right here, but it didn't really happen. Why? Well, because we have an ECB interest rate decision press conference, and the market already did pull back into that area and already expanded. So I didn't really require a daily imbalance at that time. But right now we have this little guy on the daily, bullish on every single time frame right now. And the volatility time frame, again, you can see on NFP, it kind of chopped a little bit. It offered a quick long trade from that imbalance. It kind of came in a little bit earlier than the NFP came out. Swept that previous volatility low, and then it made a very nice move, but then it failed to follow through because it was already a little late. And right now, the only potential area that I see for entries is, of course, that daily imbalance, although it's quite tiny. And also, of course, this overall sell to buy area right there that could act as potential demand as well. So pretty much the setup that I'm looking for is for a pullback into this area, and then of course potential continuations higher. It could pull back a little bit lower, but I would not want to see it cross this line. If it does cross that line, then of course I could start gathering more bearish signs, but hopefully that is not going to happen. So that is your USD. Again, playing only with the daily time frame right now. Very nice imbalance, of course. Then of course the next target is going to be the daily high right here. And then as it starts following through, we can start targeting even higher. So EU, nicely bullish. All right, so GU is already on the move. Now, GU was a little bit tricky to read because there were two situations on it. It is the only major that did not pull back to the monthly time frame. And of course, then I said, well, the pound looks like it's stronger than the rest of the currencies, right? Than the rest of the majors like Euro, Aussie, NZD, because they all pulled back. But that could also mean that it could still go lower to tap into that monthly imbalance, which means that the rest of the pairs could also go lower. But of course, that is not the case. Now, we already reached that monthly high. So of course, if we take from this low to this high, the market pulls back and reached that monthly objective. And of course, if you already have a look at the next one, it's all the way up there, which is quite far. So I'm going to be working with some shorter term zones. Now here again, we can see we had a consolidation for 77 days. Crazy. 77 days of a consolidation. On the lower time frames, there are always setups. But of course, if you want that high probability price action, this is what we want. A very nice weekly expansion to once again potentially create a very nice weekly imbalance that we can be trading the week after this week, right? So of course, we do not want to see for the market to come all the way down there. It does not make sense to do so. And if it does, it pretty much means that this is a liquidity grab and then we can head lower. Okay, but of course, we're going to see this in the future. And look at this. Like here, it's kind of chop, tricky, push, pull back. And then as we start rolling, and again, as the news are coming out, it was just gathering massive momentum. And I'm quite sad that I did not really look to trade EU, GU, and the USDs because that was like NFP week and there were a lot of news on Powell. And I was focusing on some crosses actually, and I take 2 break-evens. And I took a DAX also break-even. So quite a shitty week I had taking all the moves that happened. Right now, similar to the rest of the pairs, we're having a very nice daily imbalance right here to potentially work with. Now, looking at that third candle being a massive expansion, it does not make a lot of sense to pull back all the way down, quite bearish, and then to start popping higher. So if the DXY, if EU, they pull back to their daily imbalance and start reacting, I will not require GU to do the same. Exactly the same thing as the monthly imbalance here. The DXY tapped it, EU tapped it, everything else tapped it, GU did not, but it still ran higher. So again, you have to be mindful of the moves between all those major pairs because they're very likely correlated. Now, the thing with GU, again, you can see it's very strong. It's very strong, and there was an absolutely lovely trade that I paper traded here because we had NFP and then it already tapped in. It was so very close to the draw on liquidity here, and it developed very early even before NFP, and then NFP even sent price further. So sad that I didn't take this. And of course, before that, still some moves to be taken, especially the one right here because we had a little bit of an imbalance here as well. But right now what we have is a 4-hourly zone, and before the 4-hourly zone, below it, we have a daily zone. So right now what we have to be monitoring, we also have one right here, but that looks like it's pretty much the same as this one. So we have a lot of areas to play with, and you can see the first one is already tapped and we're already getting a rejection. So if the market does not impulse from here and fails to impulse, that could mean it's going to go lower. And then of course we're going to come into that zone. If it again fails to make something, then it means it's going to go to the daily. So you can see GU is slightly bit trickier because on EU and the DXY, we have that daily zone and we do not have anything on the 4H. Here we have a couple of things on the 4-hourly time frame. So of course, scenario 1 could be something like that. Scenario 2 could be, right, we tried to push, we failed, and then we come here and then see what is going to happen. And of course, the last one is going to be to pull back into the daily and then start rocking from here. Okay, so a lot of things on GU. So I would personally give it some time. We have also a lot of news for the GU, for the GBP coming next week. We have Tuesday, we have Wednesday news as well. So that is going to be interesting. But again, we have to give it a little bit time to read what is going to happen. So let Monday pass, because right now we're having like an hourly imbalance is already trading lower. So that could cause like to respond a little bit lower. So let's wait. And of course, I am going to be updating you on the flow of the markets. Australian dollar, US dollar is also turning into a very high probability pair to be traded. We're reacting very nicely from that monthly imbalance and already printing a very nice bullish candle with a very nice drawn liquidity all the way up there. Weekly time frame, we're also printing an expansion candle here. So similar to the rest of the pairs, I wouldn't like to see it cross below this line because this is going to invalidate a potential weekly imbalance. Now here we are reacting from this, but this is not valid because it already got tapped and reacted, so it's not very valid. So already similar to the rest of the pairs, the next lower time frame liquidity target, apart from the monthly, is going to be that weekly imbalance where we could potentially respond from. And then of course making our way to the daily, absolutely beautiful price action right now, right? It was very choppy. Here again, monthly time frame, you can see how long it takes. So since we tapped here, on the 1st of February, it took a whole month of accumulation. And then, of course, the next month starts to pop. So again, observing that monthly time frame, I am learning a lot, right? And of course, you can see the higher the time frame is, of course, the longer the time it will take to potentially move. So right now we have those two daily imbalances, right? I would very much prefer for the market to respond from the first one. Wow, because if it goes to the second one, that is going to prevent a new weekly imbalance from forming. Of course, if it still taps here and starts to expand, then I would not really require a weekly imbalance, but it's going to be good if it forms. Now here, of course, we have this overall area of a consolidation. So I do not want to see the market return back inside. So what I essentially want to see is just a quick tap inside this area and then for it to immediately start going higher. So again, technically, Aussie dollar, we're trading with a daily imbalance. It does look very nice for the market to tap inside. We do not have any AUD news, but we have a lot of USD news. So this one is very likely going to move as well. And similar to EU and the DXY, we do not have anything to work with on the quality time frame. So the only area that I'm going to be observing is the daily. So as we come into the daily, then we drop to lower time frames like 4H, 1H, 50 minute, and we're going to start looking for shifts, driving us all the way to that daily high. All right. So that is AU. Very nice, very simple. Then, of course, our first target is going to be the daily high. Second target is going to be the weekly. But of course, as price develops, it can form new structure and we're going to be having new targets. So bullish bias on AU. The only detail is I do not want to see it go very deep towards that imbalance and very deep below this gray box overall. Now, if we compare NZD to the Aussie, this one looks right now a little bit weaker, and you're going to see that on the lower time frames. So let's jump onto the weekly time frame. Here you can see we do not have a very nice expanding candle. We do have an expansion candle, but if you compare it to AU, that is clearly expanding and potentially creating an imbalance. This one still does look like a consolidation. So of course, if I am to choose between NU or AU, I'm gonna definitely pick AU. Although this one has a very, very clear target that you can still trade towards. So I'm absolutely also going to consider NZD/USD because it has formed that daily imbalance. We have, of course, one below it as well that could potentially get tapped. And you can see right now the market has responded from the very last resistance area, which is this very tiny little bit of an imbalance. It filled it, it actually responded from it. And right now, if order flow is to continue bullish, I don't see a reason for us to not tap here and not to rush towards that liquidity. That is very clear because NZD is the only pair that hasn't taken that liquidity. EU took it, AU took it, GU took it. This one hasn't. And of course, if the overall sentiment of the market continues, I think that is a very nice low-hanging fruit right here to be capitalized on. So I'm absolutely going to observe NU as well. Nothing on the quality time frame. So again, the only focus and the only kind of threshold we have is the daily time frame. So pulling back into that daily imbalance and then potentially continuing to go higher. Now, of course, in this case, I wouldn't look at PD ranges because right now we're having a massive expansion. And of course, you're going to see that usually the market is going to stop at a potential rebalance, right? So again, the 50%, I started applying it in slightly different ways that I'm going to be talking in another educational video soon. But right now, focusing purely on that momentum going higher, that gap that we have right here, filling it and then rushing towards the overall two targets we have that are very nicely overlapping. So NU looks pretty good for longs. All right, well, congratulations for gold's new all-time highs. So after we took out all-time highs in December, we had 2 months of a consolidation, and once again, March being a magical month, everything starts moving because it's my birthday month, you know, and we're having a very nice push into the highs right now. Very nice expansion. The weekly time frame also expanded lovely, also creating a weekly imbalance. Now, I would not expect this one to tap because if this one taps, we're going to have a massive bearish candle. So we do not want this. I can use this as a point again. I'm just going to take this whole box right there, this whole consolidation box. That is the overall kind of accumulation. So I do not want to see the market to go very much below this box, right? So of course, if we can find something to work with here on the daily time frame, and we have so many daily imbalances here. We have the last one right here that is kind of tiny. I can't even draw it. Let me just make it like that. We have this one, another tiny. We have this one right here as well. So when you have all of these stuff, you ask the question, okay, which one is going to tap? Well, usually you're going to be waiting for confirmation to know which one is going to hold. But also usually you are looking at news. So if you don't have news on Monday and the market taps this, well, very likely it's not going to move. But then if you have news on Tuesday and the market whoop rushes into this one, then you potentially know that this is the one that is going to hold. So a little bit of a detail right here. So we have a lot to work with. And honestly, if you look at structure on the volatility time frame, it is not very lovely. Like the last valid range, of course, is from this low to this high. We do not have imbalance within that leg. So again, if I don't see the volatility as clear, I stay on the daily. All right, I stay on the daily. Now, a lot of things could happen, of course, so I'm not going to throw a forecast, but essentially I am going to be monitoring the other majors because all of them are potentially going to make some sort of a pullback and then collectively start moving higher. All right, so again, let's monitor for that. But gold, absolutely bullish. Now, another detail is that we're trading at all-time highs. And all-time highs are usually very tricky because the market could start rejecting, of course, below all-time highs because a lot of liquidity is probably resting there. But again, I am going to confirm if this is going to hold, if of course we have a pullback, and if we start continuing to go higher. If all of a sudden right now we get a massive bearish rush like this, that is not a good sign. We do not want to see this happen. So again, corrective pullback into some of these imbalances, lower time frame shift, starting to trend higher will be very nice from gold. And of course, similar to the rest of the pairs we covered, bullish bias. We just have to wait for the proper zones to tap and for the proper time, which is Tuesday after CPI. Well, right now, it's not a time, according to me, to be trading JPYs. Why? Well, because with the DXY being so bearish, that immediately makes USD JPY bearish as well. However, with the major currencies being so bullish, then of course the JPY crosses are not going to be very nice. So right now, my tip is to be focusing on the majors. So that is the USD pairs. Now, the USD JPY, again, on Forex.com, it didn't take out the highs right here. I think on another broker it did. But again, we see that it still tried to push up there. And it looks like it's failing. And of course, we know why. Well, because the DXY is shifting. Now here, of course, we also had quite some time of not really any clear moves. And right now we're having a very massive expansion lower to once again potentially create a new weekly imbalance going lower. Of course, if we do not cross this line, so hopefully that doesn't happen. The very next liquidity target is this low. So of course, let's see how we can trade into this. Daily time frame, massive expansion. Like it started on Monday, little pullback, then Tuesday, kind of warming up, then boom and boom and boom. The more the time passes, the more it starts to impulse. And that is what you have usually when you have a lot of those fast news, right? The first one is released, they start accumulating. The second, and it just continues and continues and continues. And usually what I also marked for myself this week is I think, all right, well, the market pushed. It doesn't really. So on Friday, I really didn't think NFP is going to make another push because we already had 2 days. Like you saw on EU and GEO, for example, it wasn't that huge, but it was still huge, right? So again, when you get that momentum being supported by the news, don't be fearful to continue striking and following it. Now here, of course, we have that daily imbalance. Can it get filled? Well, probably if we do not form a new daily imbalance on Monday. So let's, of course, see how that goes. And according to me, this one is going to need a little bit of time. So here we have something to work with on the volatility time frame, which is that volatility imbalance. At least we have volatility imbalance between this high and this low. That is the most recent volatility time frame range. So I see a couple of scenarios, but once again, I'm just going to be waiting for Tuesday for the CPI. I am overall bearish. Now, again, is Monday going to pull back into the volatility time frame and start rejecting, or is it going to be waiting for that daily imbalance to tap? We don't know. We don't know. We have JPY news on Monday, so that could be interesting to potentially look at. But being a JPY pair, being a USD pair and having CPI on Tuesday, I would prefer to wait, right? To wait, and of course, we're gonna flow with it as it develops. But again, those are my two shorting zones. The volatility zone, which of course is lower probability because we're having a daily zone just above it, so preferably the daily. But if we tap into the volatility time frame and we start shifting lower on the 50-minute time frame, for example, on the hourly time frame, then I will not hesitate to potentially take a short. But USD JPY is not, and the JPYs are not going to be my focus in the upcoming week. Let's have a quick look at the other JPYs, which once again, I don't think they're very nice to be traded right now. So we don't have much on the monthly right now. Again, you can see the first 2 months of the USDs were very choppy, but the first 2 months of the JPYs were very nice. So right now the cycle shifts, right? The momentum goes onto the USDs. Now again on the weekly time frame here, we had this weekly imbalance as a reference point. However, by the looks of it, it doesn't look very nice. It doesn't look like it's rejecting from it, right? It doesn't look like it's actually engulfing it. And as I start going even lower, we're potentially going to start seeing bearish imbalances. Again, this one is very tiny, so I'm not going to draw it. But we see a lot of momentum. There was a very nice rejection here on Thursday from that weekly zone. But again, we can see Friday kind of, all right, not really going to follow through. And it pretty much filled this whole week right there. So then going on to the 40 time frame, I don't like it. Like the USDs are just so clear. This one, like it had this very nice push lower. It has bearish imbalances here. They failed. Why? Well, because potentially to come back to retest the upper one. Right now, again, impulsing lower, making another bearish imbalance. So actually, I do see a lot of bearish. Yeah, I see a lot of bearishness on Euro JPY. But once again, we do not have any JPY news. We do not have any Euro news. So not good to be trading those pairs. Of course, I'm going to say I'm more bearish than bullish, but preferably the attention goes onto all the USD pairs. Similar is GJ. We are staying right now above these monthly highs, but you can see we're struggling to move. Now, again, the problem is that GBP USD is super strong and USD JPY is super weak. So guess what? This one is going to consolidate because there is a conflict of interest, right? Now, this one is still looking a little bit bullish. We have this tiny, very tiny weekly imbalance that we're currently rejecting from. We, of course, have this overall very nice sell to buy candle that we're tapping into. But once again, it's just the confluences are right now not aligning. The time for JPYs is done, I do believe. And right now, we're potentially going to start seeing them chop around a little bit. Now, we have some bearishness coming in on the daily. The weekly is still looking a little bit bullish. And then if I drop to the 40 time frame, we have bullish, we have bearish. Not good. Not good. So once again, I am mainly disregarding them simply because the USDs are super clear. If I really jump into it, I could, of course, force a trade idea, but it does not make any sense to be trading JPYs and especially JPY crosses like EJ, GJ, AJ, NJ next week because we do not have any news either for the Japanese yen or for like Aussie, GBP, Euro to potentially move those pairs. So again, don't focus on that. We can look at it potentially next week or sometime after. All right, let's have a look at some indices which are getting very interesting as well. Now, again, we are trading at all-time highs, which is usually a little bit tricky because when you have an all-time high, of course, you do not have a target to the left. So you always have to be looking for some sort of a pullback and then target all-time highs. And this is my first time actually trading at all-time highs and targeting all-time highs. So I can see that it's rather tricky because again, at that time here, I wasn't really trading. And then as I started actually looking to trade indices, there was always that high right here. And as we're actually taking it right now, it gets a little bit trickier. But overall, bullish on the monthly, nothing much to look at. Now, the weekly time frame, you can see it's just very nicely going higher. Now, if I truly zoom in, nah, man, this is nah. So there is a tiny little bit of an imbalance here, but I'm not going to be looking at it. Now, if you look at the current weekly candle, it is tricky. It's a nice indecision, bearish body, does not tell me much. Okay, does not tell me much. Now, if I go to the monthly, like the very low imbalance that already formed is all the way down there. So I don't think it's logical for the market from here to massively start rolling lower, taking into account that the DXY is bearish, so indices should be bullish. But I do believe we should be looking for some sort of a pullback. And again, I would love to have some sort of a weekly reference point in order to know where it could pull back to. And again, I could potentially take this as a reference point, and then overall this sell candle that could act as demand, right? And because what we can see right now is that the daily time frame is starting to fail to continue making daily bullish imbalances. Now, this week I was paper trading a lot of indices. Again, I'm still working my way around some new knowledge that I've been getting and building up my trading plan, and of course figuring out the pairs that I want to trade. I was observing a lot of crosses for a couple of weeks, but they're very slow, so I disregard them, just learning from experience. Here we can see we had a very nice daily imbalance higher, moved. We have a very nice daily imbalance higher here, pushed lower to potentially show us that it wants to go lower, but failed to make then a bearish one. And there was a pretty nice long both on Wednesday and Thursday towards that high. And then you can see on Friday, we took out that high, but we failed to continue impulsing higher, not creating a new daily bullish imbalance. So that is bad news, because as I start going lower right now to the volatility time frame, we start seeing a little bit of a pattern for a potential reversal. Now, we don't really have a volatility imbalance going lower, right? So actually getting to the volatility time frame, it gets a little bit tricky, and I would say we have to wait. We have to wait a little bit. And what I would like to wait for is to potentially not for the daily, but for the volatility to show me that it wants to potentially go down. Like a nice volatility push lower, then we can very easily trade into this low. And here we have a tiny little bit of a weekly imbalance, right? And then from there, we can potentially start going higher. Also, what is going to show you this is potentially the hourly time frame. Again, you can see we have a very nice range. We had a quick pop up and then a very nice reversal. So that is a very nice reversal pattern. This is how usually tops are forming. Consolidation, push up, going all the way down. Consolidation, push up, going all the way down. So I do not want to call a top, but if we continue getting 1 hourly and 4 hourly order flow going lower, then I would potentially say this could be a nice target. And then from there, we could potentially continue looking for longs. So let's see. Right now, I'm not going to say anything because actually I'm going to focus on Forex this week because they're all very clear. Well, indices could be a little bit tricky, but I'm still going to be waiting for CPI on Tuesday. And then, of course, trading them on the days after. Now, SPX not giving me a lot of clues, so I will just prefer to wait. All right, let's look at NAS. Now on NASDAQ, we have this monthly imbalance, and that is a very, very good target for the market to potentially pull back, rebalance, offer fair value, and then from there to potentially continue the uptrend if, of course, it's going to go higher, right? A very big sign for me that this monthly zone is going to get tapped is if we actually cross below this line, because if we actually go and tap this line, there is not going to be a new monthly imbalance being created. That means that the market is getting weak and it could actually want to see a little bit of a rebalance down there. So again, monitor this line overall. Now on the weekly time frame, what we're also seeing is that the weekly is failing to continue impulsing higher with imbalances. The last one we had was here, tapped, impulse. All right, here we pull back, potentially accumulate a little bit. We're pushing up again right now, but it's failing to do it with a lot of strength. This weekly candle swept the previous weekly high and nicely rejected lower, although we had a lot of beautiful long opportunities this week on Wednesday and Thursday. But we can already see it here. Like it first had this bullish zone, failed. It made a bearish on NASDAQ, which is why I avoided. I actually took a trade on Thursday on SPX, but I didn't trade NASDAQ because NASDAQ did have this bearish imbalance, but it still came on and took out the high, right? It took out the high. But then instead of continuing going higher, Friday again takes out the previous daily high and very nicely rejects. So even for the shortest term, I could say that based on this formation, we could be targeting some of these lows. I don't want yet to call the monthly imbalance because this potential I'm going to call next week if we start seeing the bearish order flow. But right now, judging by Friday's candle, we could push a little bit lower because I do not see any bullish signs anymore. Now here again, we have that fall imbalance going higher towards the highs. That was a beautiful trade right here, this long. But then as we did this, the market is very violently reversing. And unlike SPX, here we do have a fall bearish imbalance. That is the first sign of a potential reversal. So actually, if you're looking for a trade, it could look something like that. Could look something like that. Although judging by this wick, the market already did pull back to potentially rebalance something, which is the hourly time frame. But yeah, I'm going to say just from SPX and NAS, I am getting a little bit of a bearish overview on the indices, but not for a long term. So we're probably going to be seeking some liquidity. Now the question is where? Are we going to pull back all the way to the monthly, or are we just going to be taking out some lows and then continue the reversal higher? We do not know, and personally, I do not care because whatever happens, every single day, I'm going to jump onto the charts, read it, and adapt to whatever is happening, right? So this is my very recent setup on Nasdaq. I'm short bias potentially towards this low. Let's see how it plays out. Preferably, I would like to trade it on Tuesday after the CPI. DAX is also at all-time highs. So far this month hasn't moved as much. Dropping onto the weekly time frame, let's see what we have. Well, we're having a beautiful weekly imbalance right here. So that immediately turns into my reference point right here. So I would absolutely be expecting for the incoming week to go down. Well, not absolutely. Again, I shouldn't use this language. I would potentially expect for the market to come into that weekly imbalance, maybe even reject it for a week, and then potentially next week to potentially go higher. If it does not go higher, then of course we have one below as well, right? Now, of course, we're going to start seeing this by looking at the daily and the volatility time frame. The first sign is, so I took a couple of break evens, and I learned a very important lesson on DAX this week is that DAX is, I mean, it's stupid, but I'm stupid, is that DAX is again, a German index. So those are potentially the 40 biggest companies of Germany. And that's the euro, right? That's the euro. So that is not a US index. That is a European index. This is why it moves in London. And this week we had the ECB interest rate decision and pretty much the press conference. I traded it on Tuesday. I traded it on Wednesday, taking break evens, long bias, and it moved on Thursday. Why? Well, because of the euro news. So I was like, all right. So again, from going forward, learned a very nice lesson. Luckily I didn't burn my account doing that. But again, DAX goes very well with euro news. Right. Now, again, the sign is that we're not creating a new daily imbalance going higher. We're having a very nice rejection candle on Friday that very nicely sets up for a potential tap of that weekly imbalance. And if we start getting 4-hourly and hourly structure and imbalance is going lower, then that could be very nice. And honestly, we have this very big push. This is where I was looking. No, I wasn't looking. That was too late. I was looking from these areas right here. I was in a long from here and targeting this high. It didn't take out the high, but then the next day, I think the next day that I didn't trade actually. And then on that day, I also didn't trade because it went very fast. Now, this imbalance is no longer relevant because it's already been tapped and it pushed. So no longer relevant. So there is nothing much to stop price from actually going all the way down here, right? There is this overall region, the sell to buy, that could potentially stop price. But I will potentially say I'm more bearish. Now, on the volatility time frame, I would like to see maybe one more leg lower with an imbalance to potentially guide me towards that zone. If that doesn't happen, DAX flows very nicely with the hourly time frame. And you can see the hourly time frame is already showing us the bearish signs, right? Making a top, imbalance is lower, respecting them right there. Another one respecting them right here. So again, I would just wait for Monday to pass to show me what it wants to do. And then potentially makes a very nice fall imbalance going lower to trade it on Tuesday into that weekly imbalance. Then as we tap into the weekly imbalance, then we wait to see, is it going to reject or is it going to continue running deep into it? That could suggest it might actually want to go lower. But of course, let's take things one step at a time. First target is going to be that weekly imbalance. The question is, how do we get in? Well, we have to wait for a setup. US 30 is a very nice index to potentially monitor for the overall, not strength, but if US 30 doesn't push, that means that the other two could potentially stop pushing as well. Now here we have a very nice monthly imbalance, and we have even a much nicer one that is resting in right here that perfectly aligns with this overall zone right here. So this is essentially where I would see price as a last resort to then from here start pushing higher. And very likely, as we start reaching into those areas, I'm going to be stacking up even more on stocks. It's been a great year for stocks right now. Dropping to the weekly time frame, we do not have anything on the weekly, so I'm immediately framing this as my potential target already because I see the weekly is failing to expand. We have a very nice evening star formation, consolidation, expansion right now. Daily time frame, it's already starting to point lower. And what I truly like, we already have order flow established right here. We have an imbalance going lower, respected, very nice push lower with another imbalance. It's super tiny, but we still tapped it and we still rejected. So of course, the first target is going to be this. Second target is going to be this. And then, of course, third target goes that monthly imbalance. Now, don't take this seriously. The market could open and it could pop higher, right? Indices, they are wild. They can do anything they want, but I also find them to be quite accurate as well. I even think to actually start using the futures data, because Pepperstone, like 8cap and all these brokers, they have different wicks, they have different prices as well. Not very nice. Then as I go to the 40 time frame, what I truly want to see on the 4H right now is some bearishness, because the 40 time frame on this is why I don't trade it. It's usually very messy. It's like if you actually look at it, the 40 time frame is very messy on US 30. So I mainly just use it to kind of judge the overall sentiment. But right now, as I see that this one is confirming bearish order flow, then I would be more confident to say, all right, the other ones could also potentially go lower. Now, if I want to take a trade on this one, I would like to see 4-hourly or hourly structure and imbalances going lower. That's it. We don't have them yet. It's quite tricky. Quite tricky. So this is why I don't like and don't trade US 30. But overall, if you're trading it, I would say I am short biased just based on this point in time. Tomorrow, the market could print a bullish candle, and then I'm going to say, well, we're getting close to all-time highs, bullish imbalances. I'm going to target that, right? So it's all about the flow. But overall, bearish outlook on all the indices, which does not very much kind of correspond to that bearish bias we have on the DXY. But of course, let's see. All right, making a full circle back into the DXY. I am absolutely short biased on the DXY for now, looking for those daily imbalances to get filled, preferably the first one. Now, again, we have CPI news on Tuesday, so we have to wait for this one to get out, because after this one is out, then we have pretty much Tuesday's New York session, full Wednesday, full Thursday, and full Friday to be trading the USD pairs. Again, main focus, EU, looking very good for a potential long. GU looking also very good, although this one is quite strong. AU is my choice as well, but NU is the only one that hasn't still taken its draw on liquidity, so this one could also go very well. All the USD pairs are looking amazing. Now, gold as well, pushing very nicely above all-time highs. So again, we have to be slightly bit more careful with this one, but any sort of pullback, and then of course any sort of order flow shift on the lower time frames, it could drive us very nicely into new all-time highs. The JPYs, I would prefer to not trade them, especially like EJ and GJ. Those are a skip for me this week. UJ could give a short, could be nice, but I would prefer to be trading all the rest of the pairs that we just covered. And also the indices, there are, again, based on what we had a look at, they're all giving me a lot of bearish signs that they want to go down. So again, I'm going to be looking right now for potential bearish order flow. Why? Well, because I do believe they are due to some sort of a retracement to a higher time frame zone. In this case, it's either a monthly or it's either a weekly zone. We don't have a lot of weekly zones on the indices, so the only one that we have is a monthly. So can we have a bearish month on the indices with a bearish dollar? It's not very likely, but of course, only time and price will show us. But overall, I am going to be focused on Forex pairs this week, especially the USDs, hoping to catch some longs, because right now we're working with a monthly time frame context, going from monthly zone to a monthly zone. So of course we have a lot of time to be trading, and of course every single long that you take right now will potentially be high probability. So Fanatics, let me know how was your week. Let me know how you performed. Let me know what you're actually looking for next week. I wish you a lovely weekend and talk to you on Wednesday.